will they ask. Then afterwards, I'll go for your comparable company analysis, one sum. Then other models also will try to very quickly do it. Okay. So, okay, comparable company analysis, they're given two. Okay, not bad. Quickly we'll do. They ask for year one, year two, year three, year four. Existing things they have not given. Okay, so let me write here year one. Then they asked for 4 years. Okay, now let us see for first one is income statement. I'll go for home, merge, income statement. Then what I will do, okay, I'll just type it, revenue less.
Stop good, sir.
Okay, so revenue, then they have given your less cogs, that is equals to your gross profit. Now, after this, control B, gross profit also I will do control B. Then less, what all we are going to subtract, revenues have been given here, cogs has been given here. Then in your under your operating expenses, they given your administration expenses. Then they're given your marketing expenses. Okay. Then they were given your other expenses. They're given your other expenses. After giving your other expenses, then they're given your depreciation. So you have got your operating profit, depreciation. You have got your operating profit. From this, subtract your interest. Then after subtracting your interest, you will be getting your net profit before tax. Finally, after your net profit before tax, from net profit before tax, you'll be subtracting what? Less tax. Finally, you'll get your
Net
net
income.
profit or net income. Okay, just a minute. Okay, so you got your net profit. Okay, so before going further, first and foremost, let us write off your assumptions. So merchant center, I will freeze your first row, view, freeze panes, freeze top pro. Then assumptions, you have your new customers.
ಅದೇ ಇಲ್ಲ ಫೋನ್ ಹೇಳುದ್ ಬಿಸ ಕೊಡಲ್ಲ ಹೋಗಮ್ಮ.
You have 75,000. You have 1,20,000.
20,
You have
2 lakh 50,000,
2,50,000. Then you have 4
4
lakh
lakh 50,000.
50,000.
50,000. Okay. For this year one, then you have revenue per customer, that is 40. Then you have refunds. Refunds means it is nothing but assume it as like sales written. Refunds is nothing but assume it as sales written. Type it as 0.05. Drag it. Then go to home percentage. Then after refunds, give it as discounts 0.08.
Drag it.
Okay. Then you're having your cogs. Okay, so this is revenue. So this is revenue, this is cogs. Okay, and then your cogs, first and foremost, you have your opening stock.
35%.
Okay. Okay, so in cogs, what you're going to do is, first and foremost, you're having your opening stock. So under your opening stock, write it as 0.35. Okay. So when you give your it as your 0.35, give it as percentage. Then you have your purchases, give it as 0.05. Then you're having your closing stock 0.03. Okay, so you have this. Okay, so you are having operating expenses. Okay, so when you give your operating expenses, again, you have your administration. Administration, make it as 0.2. Then you have your marketing, you have your point one, then you're having other, that is 0.05. Okay, so here they're given depreciation directly. Okay, no, depreciation are not given. They're given
Yes,
your
sir.
interest
Interest.
rate directly. Interest rate is 1,20,000. Uh, select this and select this one as number. Okay, so write your 1,20,000. This one is 72,000. Then this one again will make it as 72,000. This one will make it as
48.
48,000. Then we'll have your tax rate, 0.21, and I will
Then
drag it. Okay. Students, before going further, one small thing. Uh, okay. So, PG coordinator of GFGC Devanili, Rajesh sir has given one particular suggestion. Sir, Rajesh sir, can you come on speaker, sir?
Tell me, sir.
Okay, sir. Okay. So Rajesh sir has told when there is, okay. So Rajesh sir has told that when they have not given the interest borrowed and expended date, what we can do is we can take the average value. So while taking this average value, when they have not given when the date has been borrowed or when it has been repaid. Okay. So what we'll do is we'll multiply this one into zero point 0.5. We'll take it as average. Is it okay, sir?
The opening and closing balance can be averaged, and
That's
on
what,
that
sir.
basis,
Closing balance, sir. We'll take it on closing balance into 0.5. Is it okay, sir?
yeah, opening balance. No, sir. Opening balance plus closing balance divided by 2.
Okay. So you want to interest to be calculated opening balance into closing balance
When
divided by
dates are
2.
not
Then you are
given.
going to asking to multiply it. Yes, no,
Normally
sir.
interest will be calculated on opening balance.
Opening balance, but here
If
in projections, because they are not giving in this one, sir, we are assuming it will be taken at the first year start. So that is what
partic-
was being given. So if you want to take an average, shall we take divided by 2 of this, or opening balance closing balance divided by 2 into
yeah,
interest rate is what you're telling, sir?
yeah.
Okay. Interest, just one small correction. What you all can do is, Rajesh sir has told, equals to.
My concern is if students take this for calculating from us,
See, during
we will
CFR.
be
True, sir.
misleading them.
Okay,
We
sir.
are
Okay, sir.
misleading them. We are being teachers, sir.
Okay, sir. Sir, okay, sir. This one, opening balance, closing balance. Then what we'll do is we will divide it by 2. Then we'll multiply it with the tax rate.
This applies only when dates are not given.
Okay, sir. Into tax rate. Sorry, into interest rate. Is it okay, sir?
Okay, sir.
Now, is it okay, sir?
Yes, sir.
Sir, if any other faculty is there, even you also can do. I also thought this one would be better also, because instead of following what is there in the books, I think this one, what sir is telling, because it's foreign books, sir has told about ICAI guidelines. So that is why I thought this would be better also.
And the same thing applies to accumulated depreciation also, sir. But what you are telling for the problem's sake, it is okay.
Yes,
But
sir.
accumulated depreciation is depreciation charged already in the previous years.
Sir, one more thing here. No, sir, for that particular thing, here also they are given already existing assets depreciation. You can see it is 2000, sir.
Okay.
So,
it is okay. Now it is clear.
So here also the previous accumulated depreciation is taken into as for 1 year itself, sir. So you can see the
Yes,
total value comes to
Okay.
10,000.
Okay, that's all. Here it is clear.
Okay. So interest is okay, no, sir? Now?
Yes, sir. As per ICA, it is. It should be taken as when dates are not given. Repayment and
Okay.
borrowed capital dates are not given. It is better to take the average of loans, and on that basis, we have to calculate interest.
Okay. Okay. So students, kindly note it down. One small thing. What you can do is, as just as sir told, for interest, I'll tell you all, you can do equals, or else I'll do again. You can type average. Kindly note this average. Then I will open the brackets, select opening balance, then press. Then I'll take closing balance. Then what I'll do, I will close the brackets. Then what I'm going to do is I'm going to multiply it with the interest rate. I'll be getting this. Is this one okay? All the students, if you have any doubts, kindly look at it. I'll just zoom and I'll put the formula here. Look at here. Average of opening balance and closing balance into tax rate for interest. Is it okay?
Yes, sir.
Okay. All the students, kindly make a note of it, ma. Only for interest rate. Average of opening balance and closing balance into into the tax rate.
Into interest rate, right, sir?
Into interest rate. This is C41 is interest rate. Here we have given the interest rate. Just a minute. I'll switch off the zoom. Look here. Once again, I'll do equals to average of opening balance. I'll select, press comma, closing balance. I'll select. I'll close the brackets. Then I'll multiply it with interest rate. Then I will drag it. Is it okay? Okay.
Yes, sir.
Sir, okay. Kindly note it, ma. Sir, Sir Rajesh sir, we even in examination will follow the same rules, sir.
Yes, sir. It's okay, sir.
Okay, sir. Sir, regarding the depreciation also, is it okay, no, sir?
Depreciation also when dates are not given.
We'll mention of this
here
one,
in this,
sir. Depreciation
in this problem, they have already mentioned existing equipment depreciation and given clearly.
Okay, sir. Sure,
So
sir.
we can
Sure,
consider it. Yeah.
okay, sir. So
Okay,
now
thanks.
it's fine, no, sir?
Yes, sir.
Okay. So students,
Sir,
kindly
for
note this.
calculation of interest, hello.
Yes,
Sir,
ma'am.
calculation of interest, we can do it like this also, no, sir. Is equals to minus, directly we can open the bracket, debt minus debt repayment plus debt borrowed into interest percentage and enter. We can do it like that also, no, sir.
Madam, actually, for everything, because now students are going to work in companies, for every item, you're going to have a schedule, ma'am. You should
Yes,
have a
sir.
schedule. Without schedule, even if students next semester, they're going to write CFR and all, for every item, they got to write a schedule. So that practice
Okay.
of writing schedule and working note, that should be there, ma'am. So it is better to write a schedule and then link it to the income statement, ma'am.
Yes, sir. In schedule only we can do it like that, no, sir. Debt we can put in one column, debt repayment in one column, debt borrowed in which year they have borrowed, in that we have to type in that. In total interest, we can calculate like that directly, no, sir. Debt minus debt repayment plus debt borrowed into interest percentage.
Ma'am,
It will come
we want
directly in
long-term
the
borrowing separately, we want interest separately, ma'am. So it's better to have two different columns, because this year we're asking only income statement. Suppose if you go for next of a balance sheet, this long-term borrowings and interest, it should be separate so that they can have different schedules, ma'am.
okay, sir.
Okay, ma'am. Thank you.
Thank you.
Any other concerns? Okay. Can we continue?
Yes, sir.
Okay. Okay. So kindly note it, children. It was a very important update. I thanks Rajesh sir for the update. Okay, interest you take opening balance and closing balance. You take the average of it, because when the dates are not given, take the average of it and then multiply it into your interest rate. Okay, so I think that would be better also. Okay, kindly note it. All this. So we had your revenue, you had your revenue per customer, then you have your refunds, then you had your discounts. Okay, so the next thing what you're going to do is you're going to write your schedules. Okay, so let us see how exactly your schedules are done. Schedule 1, schedule 1 will write your revenue. Okay, so under your before starting with your revenue, here I have given one column space. Write your total customers. You are going to write your total customers. Here they are given very clearly, it is new customers. Here they are given it as new customers. So for the next year, it will be cumulative. This year customer and last year customers. So here what you are going to do, write your total customers. Here you write here it as 75,000 itself. Then for the secondary year, write it as previous year plus current year new customers. Do it like that and you're going to drag it. Is this one clear? What is total customers? New customers means this year customer plus last year customer. So that one you are going to understand. New customers is always will be this year customers. You are going to assume that in your financial projection, existing customers will continue. Existing customers will continue to be your existing customers will continue to be your customers for the forthcoming years also. So that is why they given it as new customers. So first year customer, you write as 75,000 itself. Second year customer, what you do equals to last year customer plus current year new customer. Do it and you can drag it. Okay, just a minute. So this one, we got our new customers. Understand, only this is the very, very important thing which you are going to understand. Okay, so now what we are going to do is, let us go to our revenue. First right here, gross revenue. And here gross revenue equals to, right here, total customers into revenue per customer. Total customers into revenue per customer. Multiply it and you're going to drag it. This is the series 5 question I'm doing. Okay. Next, what you're going to do, you're going to subtract your discounts. Okay, you're going to subtract your discounts which has been given. Okay, so what exactly is your discount? Take your gross revenue, multiply it by your discount percent, and before it put a negative value, write it as enter. Okay. Before further, continuing further, just a minute. Select all this column. Select all this column. Go to more number formats. Number. Select this red one. Okay. Okay. And for this discount and all this, select percent. For all this, percent. So this one also is percent. Just a minute. For this one also it is percent. So you got your discounts. Okay. So after getting your discount, make a total. Make a total equals to sum. Add these two. Enter. Drag it. Now what you can do is, after giving discounts, then if they come and return only, there'll be a sales return. Okay. So here, type here refund. Okay. So refund will be a they are given a percentage of revenue, but refund will always be on this particular gross revenue minus discount. It will always be on this particular value. So equals to, what you can do is, so equals to, put your minus, select this particular value, then multiply it with your refund percentage. Enter. Now drag it. Now give your right here revenue, right, equals to sum. Add these two. Enter. Sorry. So I got my revenue value. So what I will do, right here equals to, I'll press enter. I will write it here. Okay. Okay. So I got my revenue value. Next one, I'm going to do my COGS. Can somebody tell me what is cost of goods sold formula? Right here, schedule 2, cost of goods sold. Okay. So what you can do is, in your cost of goods sold, it is opening stock, purchases, then your opening stock plus purchases less closing stock. Opening stock plus purchases less closing stock. So let us see what they're given. Opening stock as a percentage. Okay, so let us take as a percentage of revenue. Only for the first year, you give your what is your opening stock. Okay. In the question they have given like this, but always remember only for the first year, you have to give your opening stock equals to, take your revenue, percentage of revenue into opening stock percent. 9,17,000. Okay. So this one, remember, this is your opening stock percent. Okay. Now next, what is your purchase? Your purchase, they're given it as 5%. Again, you take it as a percentage of revenue. So what you're going to do is revenue into purchase. Take this one as your percent. Then closing stock they have given. They're given your closing stock. What you're going to do, your closing stock is right here equals to minus revenue into your closing stock percent. Sorry, equals to minus revenue into closing stock percent. Now what you can do here, you can write here equals to sum. Add all this. They are not given wages. They are not given any other factory direct expenses. So total it here. Now one thing what you got to understand here, even if the given percentages here, do not follow it. This year's opening stock will always be equal to last year closing stock. So what you do, press equals to, again press minus and select this. Is this one clear? This year's opening stock will always be equal to last year's closing stock. Other than certain extraordinary circumstances, it will be always be equal to the last year closing stock. So do that one. Then purchases, they are told it is 5%. So purchases might change. So drag it. So you can drag it. Okay. So just kindly drag your purchases. Then closing stock, drag that one also. So this is your cost of goods sold. Any doubts in this? Closing stock. If you want, I'll do it once again.
Sir, purchases once again, sir.
Okay. Okay. Shall I delete everything and do it once again, ma?
No,
Is it
sir, only purchases. Second year, sir.
okay? So purchases, what you do is equals to revenue into your purchase rate. Do it. Then just a minute. Then what you can do is you can drag it. What you'll be doing is drag it. Is it okay? How you got your purchases?
Yes, sir.
Okay. Okay. So only for only year for the first year you got to be little bit careful, and for the subsequent years you can do it. Okay. So opening stock will come calculate only for the first year. Only for the first year calculate your opening stock. Just a minute. I'll once again I'll show you all. Equals to revenue into your opening stock percentage. Multiply it. Okay. Then purchases, what you're going to do, equals to revenue into purchase percentage. Sorry. Equals to revenue into purchase percentage. Okay. Then closing stock equals to, write here minus. Okay. First you're going to write it as minus. Then what you're going to do is select revenue, multiply and give your closing stock percentage. Now what you're going to do is only for opening stock, what you do, right? Then opening stock right here equals to minus, for opening stock for second year, you're going to again give minus. Select the closing stock, last year's closing stock. Enter. It should come positive value. So that's why I'm doing like this. Then purchases, what you're going to do is drag it. Then closing stock, what you're going to do is drag that one also. Then equals to sum total all this. Okay. Is this one clear? Is a cogs is clear? So when the cogs are clear, let us go equals to minus cogs. I will drag it equals to sum, enter. Okay. Next, administration expenses equals to minus select your revenue into administration expenses. Drag it. Marketing expenses equals to minus revenue into marketing expenses percentage. Other expenses equals to minus revenue into other expenses rate, enter. Depreciation, leave it. Come to operating, this one equals to sum from gross profit to year. Close it. Drag it. Now next one is they are given interest. Okay, here it is little bit easy. Directly they are given off your interest rate. I have given equals to minus of, I said the interest there. I'll drag it. Then equals to sum. I'll add these two. I will drag it. Finally, tax rate equals to right here. If later I'll put minus in. Okay, I'll put off now itself. Minus if. Why I'm putting minus? Because tax should be subtracted. What is the logical test? If net profit before tax, if it is greater than 0, if it is greater than 0, comma, it is net profit before tax into your tax percent. Otherwise, if the value is false, you are going to give it as 0. Drag it. Then equals to sum. And so at last we are having only your capex. So existing depreciation, they did not give anything as such. So what we are going to do is right here, schedule 3. We'll write it here, capex. Okay. Schedule 3 will write it as capex. Now in your capex, what you're going to write is first is opening balance, addition, capex, sale, less sale, less depreciation. Okay. I'll write this one as PPE itself. Okay. So whatever is remaining is called as closing balance. So, so in your opening balance, okay, here you have your, okay, so some total capex is how much? 1,25,000. I'll write here equals to sum. I'll select all this. I'll press enter. Okay. Then I will drag this. Next year's opening balance is equal to last year closing balance. So that also I am dragging it here. Okay. So one more thing, what you all can see here is, okay, second year there is total capex of 1 lakh. Third year there's a total capex of 1,30,000. Is it okay? 1,25,000. You can see you accumulated income. First year it is 1,25,000, 2,25,000, and 1,30,000. Still now we are going to calculate depreciation. Schedule.
Sir, I have one doubt. Can you tell me from starting how refund it comes? 1,30,000 that something with amount comes.
Which one, pa?
From starting, sir, revenue refund.
Okay, I'll come back to it later. First, I'll complete up depreciation and then I'll come back to it later.
Okay, okay, sir, okay.
Okay, so here, first one will take your furniture. Okay. So what exactly we have done is furniture, it is for 5 years. So what we will do is we'll take your equals to 75,000 divided by 5. Okay. In the examination, we'll give a note. Assume all the capex expenditure was done during the start of the year. Okay. We'll give that one small note for clarification. Okay. As sir also pointed out, in this question paper, they are not given, but in our examination, we'll give one note telling that all the capex has been done during the starting of the year. Is it okay, sir? Rajesh, sir?
Yes, sir. Yes, sir.
We'll just have a small note, sir. All the capex is assumed to be done at the start of the year. Then is it okay, sir?
Yes, sir. Yes, sir.
Okay. Okay. Thank you, sir. Thanks a lot, sir. Okay. So actually this discussion helps us to have a better question paper than other universities also, sir. Thanks a lot, sir. Okay. So 75, so we have divided by 5, drag it for 5 years. It should come for 5 years. Why have dragged it for 5 years? Can any students tell me?
They have given life of the asset 5 years.
Life of
5 years.
theory is 5 years, sir.
Okay, because the life of the asset is 5 years, we dragged it for 5 years.
5 years.
Now, next one is machinery. Machinery in the year 1 is, it is 50,000. So equals to 50,000 divided by divided by 3. So what we'll do is we'll drag it for 3 years. Why will drag it only for 3 years? Because the total is
The
only
life of the asset is 3
3
years.
years. See, if you select it, you can see the sum below. It should come 50,000. Okay. Now again, take your machinery. One more machinery. This machinery was purchased in the year 2. You can see here. It was purchased in the year 2. So write here equal to 1 lakh divided by 3. Why I am again dividing it by 3? Life of the asset is 3 years. I drag it for 3 years.
3 years.
Then again, your spelling is wrong. Machinery. Sorry. Again, here also I am doing the same thing. Machinery. It is in the year 3. It is for the third year. So third year, what I'll do? Equals to 1 lakh divided it by 3.
3.
I'll press enter. I'll drag it for 3 years. Then finally for vehicles, okay, so year 4 it is 30,000 equals to 30,000 divided by 6. See, 30,000 is there in the third year. Sorry. $75,000, 16,000. Second year is 1 lakh. Third year is 1 lakh. Sorry. This one is for again for third year only. Equals to 30,000 divided it by 6. Then I will drag it for 6 years. 1, 2, 3, 4, 5, 6. You can see 1, 2, 3, 4, 5, 6. It should come for 6 years from the date of purchase. So from 1, 2. Okay. So this one you are going to do, but we are interested only for 4 years. Now what we will do is right here equals to total depreciation. I'll write here equals to sum. I'll add all this and okay. Now when this is over, right here equals to minus this depreciation. Okay, so do it here. Then finally come here also depreciation right here equals to minus this depreciation. So this is your final income statement. Any doubts? Per revenue into customer, 75,000 into 40. You will get around 3 lakhs. Do this, drag it. Discount. What you do is F2, put minus, select your gross revenue, multiply it with your discount percentage.
Discount percentage.
You will get your discount. Where's the discount? You will get your discount. Drag it. Then make a total of this. Then you again type your refund. Only for refund, what you do? Press your minus, select the above total into the refund percentage. You are going to select the above total.
27,60,000 into
27 lakh 60,000 into refund percentage is 8%. Okay, pa?
sorry, the amount will be 22 lakhs 800, no sir? But it is showing.
Just a minute, I'll show you all. 2,76,000 into 8%. Just a minute.
It is not 2 lakhs, sir. It's more than that.
Oh, sorry, 27,60,000, right?
Yes.
Okay.
27 lakhs 60,000.
Okay, 27,60,000 into
60,000.
C20 percentage into this percentage, 8%. You will be getting this value.
1,38,000.
Sorry, I typed wrong. Okay, is it okay?
The refund percentage is that is 5% now, sir, not 8%.
Refund percentage, where's the percent? It's 5%. Sorry, 5%. I'll just
Okay.
show you all. If you want to, once again, I'll show you all with your calculator. Just a minute. I look at here. It is a refund percentage 5%, right? Look at, we'll take this value to 27 lakh 60,000 into 5%. You are getting the same value. Is it okay, Pa?
Yes, sir. Sir, in question they have given as a percentage of revenue. We can calculate it on gross revenue as well.
No.
On
Question paper, refunds, don't take it on percentage of revenue. They are given it like that. Your question paper will not have so much of confusion. Refunds is always upon your gross revenue minus discounts as a percentage.
Based on
Sir,
net
that is gross
revenue.
revenue is 30 lakh now, sir.
30 lakhs.
On 30 lakh, we have to do the refund, sir.
Refund will always be given after a discounts, ma'am. That percentage will come after a discounts only. Okay, I'll just give you a small example. Amazon ನಲ್ಲಿ ನೀನು 10,000 ಎಂದು in MRP ಕೊಡ್ತಾ ಇದಾರಪ್ಪ. 10,000 MRP ಕೊಡ್ತಾ ಇದ್ದಾರೆ. 10,000 ಎಂದು ಕೊಟ್ಟಿದ ತಕ್ಷಣ ಡಿಸ್ಕೌಂಟ್ ಹೋಗಿ 9,600 ಎಂದು ಹೇಳ್ಬಿಟ್ಟು ಹೇಳ್ತಾರೆ. ನೀವು ರೀಫಂಡ್ ನೀನ್ ಇವಾಗ ವಾಪಸ್ ಕೊಡುವಾಗ ನಿಂಗೆ 10,000 ಕೊಡ್ತಾರೆ, 9,600 ಕೊಡ್ತಾರಾ?
9,600.
ಯಾಕೆ 10,000 ಕೊಡುವುದಿಲ್ಲ?
ಅಲ್ಲಿ ಅವರು ಆಲ್ರೆಡಿ ಡಿಸ್ಕೌಂಟ್ ಮಾಡಿ ಹೇಳಿದಾರಲ್ಲ, 400 ಡಿಸ್ಕೌಂಟ್ ಮಾಡಿದ್ದಾರೆ.
Same thing. Refunds will always be on after discounts. Is it okay?
Okay, sir. Okay.
Okay, Amazon discount refund will always be as a after discounts. Okay, so kindly find it. Is it okay? Any doubts?
Okay, sir.
Projection or company comparable analysis. So illandre again they might give you all sum of parts model atara ena ಒಂದು ಕೊಡ್ತಾರೆ. So just we'll have a break.
What about discounted cash flow statement?
Discounted cash flow method, this time usually we are planning to avoid it, ma.
Okay, sir. Thank you.
Okay, because this is the first time we are planning to avoid the discounted cash flow. We are planning to have only 4 models, but income statement is compulsory.
Okay.
Income statement compulsory, it will come. That's why we took so much of time for it. Other things, it will be a part B question. Okay, there will be part A and part B questions. Other things will come under part B question. Now you got to handle both that one and this one. So it will be quickly, it will be done. Okay, so we all will join back at 2:30. We'll break for lunch. Then 4:30 will wind up. Other things will take very less time.